Today, the crypto sell-off rages on as Bitcoin drops below $28,000 over the weekend. More bidders enter the mix for bankrupt crypto lender Celsius, and Cory Klippsten of Swan Bitcoin breaks down markets. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices starting the week in the red after a sharp sell-off over the weekend. As of noon Eastern, Bitcoin dropped to around $27,000. Ether fell to just above $1,800, and Solana dipped to $21.33. Okay, let's talk about the top stories. First, Do Kwon wants the SEC to drop charges against him. Court documents filed Friday show that lawyers for the Terraform Labs founder requested a U.S. court dismiss the charges in the civil suit against him, claiming that the SEC has failed to plead facts sufficient to support personal jurisdiction over defendants. The attorneys also argue the digital assets at issue should not be considered a security and therefore doesn't fall under the purview of the SEC. Kwon was arrested in Montenegro last month after being on the run since the collapse of the Terra ecosystem last May. Now, in February, the SEC slapped him with charges for allegedly defrauding investors. Kwon still faces those criminal fraud charges in the U.S., as well as charges of capital markets law violations in South Korea. Both countries have requested Kwon's extradition, but he has to face trial in Montenegro first. Next, Gemini joins the bidding for bankrupt crypto lender Celsius ahead of the auction set for tomorrow. That's according to this bankruptcy filing from over the weekend. The court document shows that one of the bidders is Fahrenheit, backed by Arrington Capital, a VC firm which focuses on blockchain-based capital markets. Other participants include Proof Group Capital Management and the former CEO of blockchain protocol Algorand. The Blockchain Recovery Investment Committee, backed by crypto exchange Gemini and others, is also bidding for Celsius's assets. Both groups are disputing the assets with Nova Wolf Digital Management, the stalking horse bidder, a term describing the first bidder of a bankrupt company that sets the bar for other bidders. A Cointelegraph reported that the asset manager's proposal includes a direct cash contribution of anywhere from $45 million to $55 million, as well as the creation of a new public platform owned entirely by Celsius creditors. Customers are reportedly expected to recover up to 70% of their funds under Nova Wolf's proposal. Celsius filed for bankruptcy in July after freezing customer withdrawals. At the time, the firm said it had more than 1.7 million registered users. Last, Gemini is also expanding its business outside the U.S. with a new derivatives platform. The company announced on Friday that it will launch Gemini Foundation, which will be a perpetual Bitcoin contract denominated in Gemini dollars or GUSD. Derivatives let customers bet on the price of an asset without actually owning it. Now, in this case, the future price of Bitcoin without having to actually buy the cryptocurrency. Gemini is making this move both as crypto companies in the U.S. face renewed regulatory pressure and as the company navigates the collapse of its crypto partner, Genesis. All right, let's talk about what's happening in the crypto market for our main story. Crypto World's Tanea McKeel spoke to Cory Klippsten, the CEO of Swan Bitcoin, to find out what kind of investor is driving prices right now.
It's been a great year for Bitcoin. It seems like there are some dark clouds hanging over it. So what is your feeling right now about the near to medium term? Where does Bitcoin go directionally? How do you see it kind of meandering?
Yeah, it has been a pretty spectacular run for Bitcoin since the start of the year. We're up somewhere between 70 and 80% in price. But I think even more interestingly, we've got this moment that I think will last quite a while, where there's a good chance for an extended bull run in Bitcoin adoption, just meaning not just number go up with the price, but number of people who are interested in Bitcoin and who are learning about Bitcoin going up quite a bit. And I think that is a direct result of the banking crisis that happened with SVB and Signature and Silvergate, and obviously with Credit Suisse over in Europe. And so, in previous bull markets, we've generally had kind of just at or near the peak and maybe a month after where there's been a lot of interest and search volume on Google goes through the roof, and you get kind of, 3 to 5 months in 2013, 2017, 2021, where everyone was talking about Bitcoin. And we're getting that kind of volume today And I don't think we're anywhere near some kind of bull market peak. And so if this market continues to do the sort of, 4-year meme cycle, we'll see if it does, but we've had peaks in 2013, 2017, 2021. If there is some kind of bull market, blow off top, something like that in a couple of years, we will have 24 months instead of 3 to 5 where companies like Swan, which are very interested in helping people understand Bitcoin, are talking to a much more willing audience that actually sees, not just with something that happened in Cyprus in 2013, but something that happened in the United States in 2023, exactly what the reason for Bitcoin is.
Who are we looking at when we're talking about, people becoming more familiar with Bitcoin? And I guess it is everybody but I guess my question is, to what extent do you see that on the retail side versus the institutional side? Talking to people every day, I hear all the time about how, the retail investor has kind of seen the light with the surge in popularity around NFTs, because there was a real use case there that they could actually relate to. Turning that to Bitcoin, how does that retail familiarity compare with institutional?
I think what we've seen is a huge rush of interest from small and medium-sized businesses, in particular in the startup landscape, but also just any small and medium-sized business that's thinking about needing to make payroll, even if their bank goes under or hits a rocky spot or their cash is tied up for a little bit. So I think you've seen some pretty big names in the finance and venture world suggest that you keep a few paychecks worth of your company treasury in Bitcoin that you control fully, that's completely outside the system, in the event that you need to pay some key vendors to keep the lights on, in the event that you would need to make payroll and keep your company going, something like that. And that just got people thinking. And it may or may not be something that actually happens, because obviously the Fed has shown a pretty strong willingness to backstop everything all the time and just try to maintain consumer confidence and kick this thing down the road a few more years. But it did get people thinking, and that got them learning about Bitcoin. And then they sort of made their own choice in many cases to come in. So we've had hundreds of new business customers just over the last 4 or 5 weeks at Swan, which is pretty cool. And yeah, definitely a huge uptick in retail interest as well. And I guess we would call retail, but also high net worth. We have Swan Private Client Services that serves H&Ws and entities around the world. And, volumes are up dramatically since the beginning of the banking crisis. We're every week is up sort of, 2 to 3x over what we'd expect kind of our baseline to be.
You've mentioned the banking crisis a couple of times, and I have found in my conversations that seems to be, at least this year, what has most efficiently opened people's eyes to the diversity around Bitcoin's narrative. It can be all of these different things, and some of our audience, both on the .com side and viewers of this show, are still kind of waking up to the fact that Bitcoin's narrative does kind of seem to shift every couple of years, that we've seen that before. Where do you see that narrative moving next?
Yeah, well, so one thing I do love about this particular narrative is that it's actually true. It is a hedge against the existing fiat credit-based system. So if that goes to hell in a handbasket or just, bleeds out over years or decades or whatever, Bitcoin is something that doesn't get affected by that. What I do like is that people stopped pushing the false narrative that you heard a lot of, mostly TradFi people, not people in Bitcoin, were pushing Bitcoin as an inflation hedge, like actually thinking about CPI. That makes absolutely no sense for an asset that is going to have ridiculous volatility in its purchasing power over the next probably at least 2 decades, if not longer. Again, because Bitcoin is the best tool for store of value that we have on the planet, and the asset pile that we humans use for store of value, conservatively 400 trillion, maybe aggressively 900 trillion. Bitcoin's at like $500 billion. And so you're talking about something that, even if your expectation is that the best tool for the job will only capture something like 10% of the market for which it's the best tool for the job, you're talking about a price per BTC in 2023 dollars north of $1 million, right? And that's something that I actually expect us to see around the end of the decade, maybe early 2030s. I'm not going to walk back my prediction of $1 million BTC by 2030. It's long dated, so I've got plenty of time to let us catch up to that. But yeah, I think that thinking about Bitcoin as a hedge against monetary debasement in the original sense of the word inflation is the right way to think about it. Thinking about it in terms of a hedge against short-term inflation.
Okay, one last thing before we go. The trial of a former product manager at OpenSea, the world's largest marketplace for non-fungible tokens, kicks off this week. It's considered the first NFT insider trading case. We'll be sure to keep you up to date as the trial progresses. That's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.